Hello everyone, my name is Marvin and today I will be walking you through a financial ratio comparison between Walmart and Target using the most recent 4 years of data. I'll summarize each firm's liquidity, efficiency, probability, and return metrics, then highlight the key differences on what they imply for each company. The data I'm using comes from slides you see here. Let's start with Walmart. So looking at Walmart's liquidity ratios, the current ratio is relatively low, ranging from 0.97 in 2021 down to 0.83 in 2024. And then the cash ratio dipped from 0.19 in 2021 to 0.11 in 2024. This shows that Walmart operates with low short-term liquidity and relies on working capital and high turnover. For efficiency, Walmart's inventory turnover is strong, with a 8.92 in 2024, and it was at a 9.35 in 2021, showing Walmart moves inventory quickly. Receivables turnover is extremely high, as you can see, 73.6 in 2024, reflecting very quick collections typically of a retailer with cash-based sales. Asset utilization is also high. Total assets turnover is 2.56 in 2024. Probability metrics are moderate. Net profit margin is 2.39% in 2024, and return on assets is 6.44%, which return on equity is 18% in 2024. Overall, Walmart shows high efficiency and respectful returns despite their thin margins. Now, Target. Liquidity is a bit stronger for Target. Current ratio at a 0.90 in 2024 and a cash ratio around 0.19 in 2024. As you can see, Target's cash ratio shows more variation year to year. Target's inventory turnover is a 6.00 in 2024, noticeably lower than Walmart's, which suggests that Target holds inventory longer, or it just maintains different stock strategies compared to Walmart. Total assets turnover in 1.94 in 2024, lower than Walmart's, indicating low asset utilization. Probability wise, Target posts a net profit margin of about 3.85% in 2024, higher than Walmart's, and a return of asset of 0.47%, and notably higher return of equity of 30.80% in 2024. Driven by stronger margins and higher financial leverage, these trends point to higher probability per sale but lower asset turnover compared to Walmart. Now putting them side by side, Walmart has a current ratio of 0.83 versus Target's 0.90 in 2024, slightly more liquid. Walmart also leads on inventory turnover, 8.92 versus the 6.0 on Target, and total assets turnover, 2.56 versus 1.94. Walmart uses assets more efficiently. And the profitability between the two, Target shows a higher net profit margin, 3.85% versus a 2.39%, and return on investment of a 7.47% versus a 6.44%, and a dramatically higher return on equity, 30.80% versus 18% in 2024. Target earns more per dollar of equity. Walmart's advantage is scale and superior turnover. It converts inventory to sales and uses assets very efficiently, but margins are thinner, and Target emphasizes higher margins and returns on equity, likely reflecting pricing, product mix, or cost structure differences.